welcome to another Watson Weekend. I'm your host, Rick Watson, CEO and founder of RMW Commerce.
I'm copyright friendly this week. I'm Jessica Laseski. If you were not here with us last week, we threw in some Depeche Mode. I was feeling it. I had like some 80s sleeves going. Today I've got Miley Cyrus, I Can Buy Myself Flowers motif. So we're not playing any music that we don't own the copyright to. Copyright friendly.
Yes.
Moving forward.
especially if the FTC, if you're listening, or whoever it is, RIAA, or any of these unions that shut people down, look somewhere else. Some other YouTube channel.
We are copyright friendly from now on. So what you got, Rick? I know you want to hit us with facts that happened on this day.
In 1980, the Miracle on Ice, U.S. beats the Soviet Union in dramatic fashion 4-3 at Lake Placid. That's
many
exciting.
Movies about it. It was miraculous.
Right? Who was Old Blue Eyes was in there.
Yeah,
I think Paul Newman was in that one.
Yes.
All right, not Frank Sinatra. There you go. 1989, which it kind of feels like a different time, right? Don't Worry, Be Happy by Bobby McFerrin wins a Grammy.
It is a little bit different. Also, the irony of that is he died by suicide.
Yeah, I should have taken his own advice.
Yeah.
And finally, 1997, Dolly the sheep becomes the first cloned animal. Trivia question for you. Where is Dolly the sheep today? In a Scottish museum.
Oh, okay.
I wonder if our producer, Vinny, has visited recently.
Is that on the TripAdvisor top 10 things?
I upvoted it, so we're going to get it there.
Hundo P. It's there now.
100%. 100%. It's a good thing. That's what we're looking at. How was your week this week?
Oh, man. You know, for it being a short week, it's so tricky because you end up packing a full day of or full work week into 4 days. So yes, I had the day off. Salute to our presidents. But man, it was slammed. And then you throw in like the kids sports. I got Shep trying out my 8-year-old for an AAU basketball team because what the world needs is a bunch of 8-year-olds traveling to play basketball.
I always love like 5 or 6-year-old soccer games.
Yeah.
It's like a snake of mass of humanity following a ball around a court. It's always the funniest thing. You said salute to President's Day. Mostly I like to salute the dead presidents more than anyone else. Right. My daughter got her shots yesterday. That was good to see and sad to see.
It's rough.
But
first time, the wailing and the crying. Then they get 9 and they start crying and you're just like, go to your room. I don't care.
You're not young and cute anymore.
Right. You're not young and cute. I don't need to hold you. You're crying because I'm not letting you play video games. So suck it.
Oh my gosh, video games. How I miss you. All right. Well, we have a few headlines coming up. And I think we'll start out with our headline hangover. This is 5 topics. We're going to spend a couple of minutes on each. Our first topic on the agenda is far-fetched, or maybe far-thrown. And it seems like Jose Neves, the CEO, has resigned. And the timeline of this company, I kind of went back. I mean, they were once like the golden child of cross-border luxury.
Yes. Huge. I mean, the poster child of everything you do right if you're going to have a luxury brand on the front, right? And there's always been this struggle of luxury being online. And do you not? You have brands that just don't sell their products online. Farfetch was really pioneering that. And it just really feels like it fell apart.
No, I think that's definitely true. They partnered with JD.com in 2017. Farfetch did invest in Neiman Marcus in 2022. I wish they had that money back now. Coupang, the Korean company, picked them up for a song in 2023 and then bought the rest of them at a fire sale at the beginning of the year.
Yeah. And I think the real question is luxury going to be able to withstand this market? If you look on the flip side, Hermes is killing it. It had 18% growth in Q4. Strong double-digit growth for the year. Really everything that they're investing in, every category, whether it's handbags to textiles to apparel, is doing extremely well. So it is not at all as bad in the luxury world. But it is for Farfetch.
And yeah, Farfetch, there were some issues. Next up, Bed Bath & Beyond. It kind of seems like they've changed their mind a few times. They famously got rebooted by activist investors. Mark Tritton was the CEO. He put in a new management team. They tried to do target strategy of private labels. It didn't work out too well. They promoted 2 CEOs last week. What's going on now? I've lost track.
I've lost track too. Now it's Bed Bath & Beyond. They're trying to bring these 2 brands together. It kind of feels like they're ultimately haven't yet found their way. And what's the space that they're going to occupy in this retail environment? Is it taking the Overstock playbook or the Bed Bath & Beyond playbook?
Yeah, and when I was prepping for the show, I actually went back to the Beyond.
Yes,
and I think they put the ixnay on that whole idea. But if you go to beyond.com now, just wait for it. Like, what I found was the trifecta of grift. Here are the 3 things that I find on the homepage of beyond.com that, and they're like coming soon. It's like grift coming soon to a theater near you. Home loans, shipping insurance, and welcome rewards.
So are they selling services or products?
Ding, 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 ding. Retail is hard, people. And as a result, let's try something else.
Hey, next thing you know, it'll be like they're opening up a retail media network. So,
whoa, zinger. All right.
We are talking about our favorite. It becomes a weekly thing now, Shein and Temu. But it's because there's always news happening. And I don't know if they do this strategically, if it's the industry publication realizes it's a way to get clicks. But we had some new headlines coming out in terms of the amount of volume that Shein and Temu ship over the States. And it's big. And essentially, we know this story, right? It's about 1/5 of fast fashion is powered at this point by Shein. There was in this article saying the Red Sea isn't the problem. It is these Chinese retailers bringing in so much and taking over the air cargo space, to the point that China is going to triple its fleet in air cargo by 2042. And so really what that nets out is like you've got 600 packages a day flying in from these sites. Like, what do you feel like this means, Rick?
What it means is there's a lot of junk going through the airport. That's what I'm coming out of this. One of the most interesting stats I pull out of this, Shein ships 5,000 tons a day. That's a lot of $10 tops.
That's a lot.
I don't care who you are.
Yeah. And I think what I have trouble reconciling is this whole narrative around sustainability, and Gen Z wants sustainability. Yet, like, the Shein shit is coming in like a storm. And that's a lot of, $10 dresses that are going to end up in our landfill, let alone the cost and the environment that it takes to just get it over. So
yeah, and I don't know if you've seen it. Shein has started to reach out to suppliers to anchor different marketplace categories. Does that sound like a familiar idea?
It sure does. And it is all about the land grab, right? They're continuing to grow this marketplace. It's about scale. It's about how do you get it there quickly. Yeah, it'll be pretty interesting to watch. She said, quit making Farfetch happen. And I'm really upset that I did not come up with that myself. She's killing it. Now she's killing it.
No, it's so amazing. Next up, it sounds like Adidas still needs Kanye. Kanye, look, he cray. Let's be honest. And I have this quote by Bill Bernbach: principles don't mean anything until they cost you something. Well, apparently Adidas never really got the memo on the whole principles idea. They're going to try and sell all this inventory at cost. Listen to these numbers. At one point, they thought this inventory was worth $1.3 billion. They are trying to make 250 million euros this year at cost. Is it going to happen?
Yeah, I don't know. I think it's interesting to your point. It was like, we're so done with content. We're just going to burn this inventory. Then like profits are down. Like, yeah, you know what? We need a 65 million shot in the arm. I think we're going to probably end up selling this shit. Right? Mama needs a new pair of shoes. So they're not just going to like sit there and
ugly shoes too.
Let that die. I don't know. There's a lot of people really still loving the Yeezy. So somebody's buying them somewhere. Hey,
No,
and you can go get your $399 pair of shoes from Donald Trump because he's in the sneaker business now.
there you go. Look, seriously, if you know, like, what kind of merchandising strategy is this? You're saying you're going to sell these at cost. Why, if you're a consumer, why would you buy it now? Why wouldn't you just wait a year? They're not going to be able to sell through this stuff. Just wait for the jobbers to pick it up, and you can get the stuff for pennies next year.
Well, I think that's probably the people who maybe will pick it up are the jobbers, and then it'll end up on eBay for some bargain element of a price. So we'll see.
No, that makes sense. Next up and final headline hangover: Big Commerce reporting earnings next year, or should we say small commerce? Because it seems like the company is getting smaller relative to its competitors. A few quick stats: 8% growth year over year, which in e-commerce it's like Walmart level, not Amazon level, not Shopify level. And so there's like different tiers of growth. They made a lot of big, unintended, progress on profitability, 26 points of adjusted gross margin improvement. And I had a quote from Edward Scott Finnegan here. Big Commerce, they had their CFO post something on LinkedIn yesterday, which generated a lot of controversy. And my takeaway from it is that Big Commerce is cheaper and less opinionated than Shopify, which sounds like your ideal dinner date.
If you don't actually want the luxury top from Farfetch, we've got something on Shein just for you.
No, it's crazy. But look, I think Big Commerce is under a lot of pressure to deliver growth, especially since their competitors are growing faster. I predict that it's going to become very hard for them to stay in direct consumer e-commerce, particularly in the lower segments. They're going to have to go up market, and I think they're going to have to focus on B2B.
Yeah, but hasn't that been their focus for a while? And what part of their strategy has been is like this is the space that we feel like we can crack and crack successfully.
It's a place where they have mind share. And again, back to the Big Commerce CFO topic, the guy has a point a little bit. One of Shopify's pricing changes is now they're charging 18 basis points for all B2B transactions on Shopify.
Right.
I mean, imagine you have like a couple $100 million B2B business that you've built before you went to Shopify. Your sales rep sold the deal. You get the transaction over EDI. What exactly is Shopify doing to earn that 18 basis points?
Yeah. What are you paying for? And do you really need the ecosystem, right? Especially if you're kind of running a certain amount of clientele through that is procured through your sales reps or your sales force. Do you really want to be paying for all the other bells and whistles of optimizing a site that really is transactional and you're just trying to get the customers through?
Yeah, exactly. And especially in these big wholesale relationships, your reps are the one that's closing the deal. It's not like your latest AI recommendation engine is closing, your fall season inventory buy.
It's going to sell it. So problem solved.
Speaking of AI chatbots, if you could believe this was actually a topic on the Big Commerce earnings call. Have you ever heard on any retail earnings call ever the number of seconds wait time
I have
mentioned?
Not. No.
Probably a good reason for that. It is totally irrelevant for investors.
They care zero.
I'm going to give some free IR training to Big Commerce on the next call. They didn't ask me, and so they can shut me up. Who cares? Like, that's just what it is. So that's our headline hangover.
They need to just call the notebook guy and you'll help them out. I think, are we ready to go into like the deep dive of our topics?
I think so. And I think we get into retail earnings, starting with Walmart. Walmart and Home Depot started this week's. I'm going to get kicked off with Walmart. A few things that I thought were interesting of their earnings. First of all, is no recession in 2024. That's what Walmart thinks. And so I think that's going to be fun. The outlook that they had this year was operating income growth of 5% and sales growth of 3 to 4%, which doesn't seem like a lot, but traditional retail, that's what it does. It grows 4%. That's literally the playbook. And I think Walmart for the past couple of years has said our operating income is going to grow faster than our sales. That is literally our entire strategy.
That's been their promise.
That's been their promise. And if you look at how are they doing this, it's coming from their high margin businesses, which marketplace, ads, fulfillment, and membership income. All those things that, frankly, Target is kind of missing the boat on. That I think Walmart has seized the initiative on. Their ad business is now a $3.4 billion business, which is not shabby. It's not like a 40-something billion dollar Amazon business. So, but it grew 28% year over year. And their Sam's Club and Walmart Plus membership income grew 20% year over year, which is way faster than the 4 or 5% that their retail income grew.
Right. Which goes to the question of, as a retailer in this landscape, can you be successful just selling products? Or do you have to really get into some of these services and these ancillary, like we talked about Target last week or 2 weeks ago in the memberships? Like, it feels like you've got to do more than just be good at retail.
Yeah, negative ghostwriter. You have to sell other things. So just look at Bed Bath & Beyond. I mean, they're selling home mortgages. Who knows what they're going to sell next? Traditionally, retailers have been selling private label credit cards. That has been one of the most profitable parts of the business. Macy's and many others. I'm sure your parents had many Macy's credit cards.
Oh, no, we were Sears all the way. That catalog came. It was like the best day ever. We had like a little tiny Sears brick and mortar store. It was super fun, you know, flipping through the catalog, folding the pages down, circling the things that I knew I wouldn't get for Christmas. But yeah, that was the dream. Interesting that I saw in the Walmart earnings as well. And I don't know if you picked up on this. They did walk through the categories that they had growth in. General merchandise was the slowest growth. However, they said where the growth did come from was in their higher income shoppers, which that kind of led me to think there's A, trade down that's happening, and B, did some of those shoppers defect from Target and end up going into Walmart?
Yeah, I think one of the things that is leading their penetration with higher income shoppers is the Walmart Plus program, which allows you to get sort of same day deliveries. Walmart's store-filled deliveries are up 50% year over year, which is a huge boost. That's something that has been Target's playbook for the past 12 years. So Walmart's like, thank you. Great idea. We're going to do it ourselves. By the way, we have better pricing than you. And Walmart cut their e-commerce losses by 40%. So it seems like there's a direct correlation between fulfilling items from the store and improving their profitability. Why do you think that is?
I think that they did, like you said, they took that Target playbook that was so successful. They've integrated their inventory in an extremely meaningful way. They also are learning, like, people don't want to go into the stores. Who really wants to go and kind of hang around and have time to like shop around the store? And so I do believe that they're essentially kind of driving that through better integration of inventory, using these larger stores as fulfillment networks for their smaller store formats. That's been part of their playbook as well. And to your point, the marketplace piece, they talked so much about the seller growth, right? And that's really been a place of how they're expanding the ecosystem.
Marketplace revenue is up 45% year over year, which is all the fees they take from sellers. And over a third of those shipments are now fulfilled by Walmart. And so we're used to have FBA. Now we have FBW. An underappreciated part of Walmart's strategy is they seem to be picking and choosing, like, hey, Target, you had this good idea. We're going to take that from you. Amazon, you had this good idea. We're going to take that from you. And it's turning out to be pretty good results for Walmart by taking that approach.
Yeah, which is odd because usually when you're copycats, it doesn't work, but they found a way to implement it in a different and unique way. Do you have any other final thoughts? Did that come up in hot topic in the earnings? Or
Elizabeth Warren, senator from California, right?
Yeah.
She just unfriended Vizio and Walmart.
She also dislikes the Capital One Discover deal. So M&A is not in her wheelhouse or forte. So smack it down. But I think Walmart likes it because it's going to be that engine fueling more of the media.
Yeah. Sorry, I said California. We had real-time corrections here on the Watson weekend. It's Massachusetts.
Massachusetts. Mass. Chupaxica. All right. So we got another one for you. Do you want to get into Home Depot?
Yeah, let's do it.
All right. So Home Depot also did earnings. It came in short of down 3%, but they beat Wall Street expectations. So that was really exciting. Something that they talked a lot about were investing in their associates, $1 billion, and how that paid off in terms of reducing attrition, keeping kind of their like long tenured, knowledgeable staff in the store. And this is important because pros is where they're really looking at growing. And so they're investing also a lot in their pro business, which I learned is about, it's only 10% of the customer base, but it's 50% of sales, because you get this like nice recurring revenue coming in. That was at least what was reported last summer, and like so kind of after one of their earnings reports. Something else that's interesting as you kind of look at the market and the dynamics with inflation and housing, people are not spending on these big projects. So it's kind of lower AOS transactions that are happening. They're not doing flooring, they're not doing cabinets, they're doing these small projects. But they said, the footfall, and people are basically still spending. It's just they're spending less. You also have lumber coming down. So that average ticket price is getting a little bit softer there as just prices overall are decreasing. But something else that I thought was like really interesting is they're committing to cut and have started to cut about $500 million out of their OpEx. So they're definitely singing this song of profitability as well, and just continuing to improve.
Yeah, and I think they're having to do that because sales growth definitely slowed down last year. Their growth was only 1% year over year, which is pretty low. They described 21 and 2022 as a hurricane, which, as a New Orleans resident, I get a little PTSD from things like Katrina.
Yeah,
growing up there. So I wouldn't describe anything like a giant hurricane.
I also, it's like whenever there are hurricanes coming, that's when Home Depot kicks up the prices, right? Because people go there, they buy a shit ton of plywood because they got to build let's quantify that better. But they also, did you hear about how they responded to the question? I think it was from an analyst at UBS who was basically like, how are you guys thinking about the future? And they essentially talked about all of this pent up demand. And I'm going to read a couple of things because I think it's really interesting, and it tells you how they look at the lens of their business and forecasting. Home appreciation is up 45% in some cases. Home equity is closer to 70%. So that equity level is $10 to $12 trillion of pent up demand and equity that people are just waiting to invest in these bigger projects when the rates get better. You also have untapped balance sheet in terms of the equity and the position in homes, the age of homes. Well over 50% of homes are over 40 years old. So like they're waiting for that kind of renovation project to happen. And then you also have the shortage of homes. So they're anywhere between 2 million to 6 million units short. So they feel like there's just going to be more and more pent up demand as soon as these rates decline. I guess it's the question, will that hit in 2024 or not?
Yeah, I mean, look, the economy being what it is, interest rates aren't going anywhere as fast as everyone wants them to. Everyone wants rates to drop. And so Home Depot CEO said that they say fewer moves and more kind of in-place renovations and not huge projects like they were during the pandemic, because everyone already spent their savings down and now they're using buy now, pay later, which maybe
Right.
isn't the best idea. On the plus side, they saw that the 2023 pressures on the consumer pocketbook to actually start declining this year. So even the Home Depot CEO has a little bit of rose-colored glasses on for 2024 and sees that things are going to be better.
Their guidance didn't blow anyone out of the water, though. Aren't they still like forecasting a 1% increase for the year? But I think they believe in this optimism, and in the event that the rates do shore up, they're going to be ready to take that demand. So look, overall, I think the Home Depot strategy is solid. I feel like they've got a good playbook. They've been investing smartly. Once we do see what happens with the home rates and these bigger projects, I think they're positioned to continue to do well. What do you think?
I do think they're well positioned. I am not so optimistic that people are going to like put on big projects. And so they might just be, I worry that they're sort of overselling what 2024 is going to be for their business.
Yeah, I think what has to happen is if you look at this pro consumer segment that they have, you kind of have to believe that more homes are going to be built, the pros are going to be coming in, and that's really where the growth is going to come from, more so than their consumer segment. We'll see.
Yeah, I agree. Next up, we're going to stay on Walmart, but actually move it in a different direction. I'm wondering something right now, Jess. Oh. And really what I'm wondering is, what the hell does Walmart see in Marc Lore? And if you're wondering what I'm talking about, a few years ago, Marc Lore started a food truck company called Wonder. And basically what he did was put an oven on the back of a pickup truck and drove it around New Jersey. And when that didn't work out, he took off the wheels of the truck and then parked it actually up the street from where I am in the Upper West Side here. The news of the day is Wonder has signed a deal with Walmart, Marc Lore's former acquirer and employer, to build a 750 square foot pilot in Pennsylvania for this ghost kitchen idea inside of a Walmart.
Yeah. Well, first of all, I just want to know, was the food good? Did you ever try it?
I did not try it. All I saw was these people out front just sort of flicking out coupons like I was walking by in Vegas. Like, do you have days like tick, tick, tick? No, they were having trouble getting people to walk in.
That's okay. Cool. All right. Well, look, I'm going to take the other side of this, because if you are Walmart and Marc Lore is the gift that keeps on giving, right? When he came into Walmart, there was the Jet acquisition. Did they overpay? Did they not? Question mark. $3 billion. This drop in the bucket. He increased their e-commerce growth. They went to like 37% in 2019. In 2020, they went to 79%. The items that he was able to bring online, they went from 10 million to 80 million. He really helped push that buy online, pick up in store transformation with Walmart Express. He also did Walmart Express delivery. So like, if you're Walmart, this guy has been a visionary and in championing your e-commerce evolution. Like, what's wrong with, investing a little more cash to see if the Midas touch is there?
One person's visionary is another person's sort of PT bar. He's very good at hype. And what I would say is that when Marc Lore, when he finds his mark, he does not let go, literally, pun intended. We have an investor turned retail expert turned city builder. Remember, like just a couple years ago, he was going to build us a city in the desert called Tolosa. What happened to that?
I forgot about that.
Totally gone. Now he's a restaurateur. And so he famously basically sold diapers for less than he bought them for, and sold Quidsi and diapers to Amazon. And then he recognized, like, hey, there's another company out there, Walmart. Maybe I can run the same playbook again. He started Jet.com, raised $820 million, generated about $1 billion in GMV, got serious FOMO generated on the Walmart side, came up in there, and then was the head of Walmart.com in the US and bought a whole shitload of D2C businesses, which now no longer exist. You want to go through the list of names here?
One of them was ModCloth.
ModCloth, that's a good one. Yes.
Moose
on
Jaw.
The list.
Moose Jaw.
Bonobos. There you go. My pants are fitting better because of Bonobos.
They do have great quality clothing. I'm just saying, they're still kicking and doing. My husband still loves them. Best
no, they're a good one. Hey Needle is on the list.
Oh, right.
Bare Necessities. No one remembers that one. Shoes.com. There's a reason no one remembers that one.
Shoe.
And Eloquy. I have no idea what that is, actually.
Women's apparel.
Okay. Yeah. That's probably the reason.
I don't see you as an Eloquy shopper.
No. Negative. Anyway, all these businesses pretty much are shut down. Actually, not true. Yes.
There's still a Bonobos like 5 minutes from my house.
They're kicking around. Yeah, your husband loves Bonobos.
Yes.
I love Bonobos. They're a good brand. At the end of the day, first of all, do you want a McDonald's in a Walmart, or do you want like a high-end Bobby Flay recipe in a Walmart? That's question number one. Question number two is, part of it, the advantage to having a Wonder in the store rather than price like Cinnabon or a Subway or some bullshit that you find in the airports, you know, half the time. In Wonder, you have a whole bunch of different styles of food that you can rotate through, and you can have Wonder refresh them, and Walmart doesn't have to worry about finding new suppliers.
Costco brings people in because of their dollar hot dogs, and maybe it's $2 now with inflation. So look, I don't blame Walmart for, to your point, looking for that unlock of what will get people in the store, because we just heard a shit ton of people are opting to buy online and pick up instead. And they got to like get some level of the cash wrap. Like they need to sell more Orbit gum or candy bars at the checkout. And you can't do that if people are just hanging in their cars. Walmart takes a little bit of risk, and they're betting on a guy who they feel like delivers.
We actually just coined a new industry term here. Opus is now buy online, pick up instead.
I don't go in the store. I just don't want to. I want to know what the audience thinks. Like, how are you guys feeling about this? I'm not saying I'm a pro Marc fan, but I'm a pro Walmart. Like, let's try to do something new. So is he risky, or has he got the golden touch? What do you guys think? Let us know.
It's risky.
It's risky. Okay, so we are coming up on time here, but it's not a Watson weekend if we haven't told you what's happening in the customer happiness index. And so we're going to bring it out. And apparently, Rick, what'd you get Britt for Valentine's Day?
Flowers. How's that for originality?
Hey, you know what? You are kicking it with like the millions and millions of other people that bought on Valentine's Day. And we got some knowledge for you. So Retail Next did a pulse of the store with some in-store analytics. They looked at 450 top retailers, and Valentine's wasn't as bad as we thought. So for the 1.3 trillion of credit card debt, for the whatever we haven't calculated with the buy now, pay later, we basically have a not as bad as we thought. So lots of people like you went out and they bought flowers and candy, but also apparel and jewelry. So either homegirl was going to get her outfit, or maybe a little bit of lingerie. I don't know. We're PG here, sort of. Maybe we're not MA. But yes, it ended up being better than we thought. And so there are a couple of things. Overall, sales were down 5.4%. So not up, but not abysmal. We're not in like the negative teens. Apparel only down 8%. Jewelry only down 3.7%. Health and beauty, not so good. Home down 15%, but that's not surprising. Like, again, like we just heard from Home Depot, people aren't buying into projects for Valentine's Day. So yeah, I mean, I don't know. What do you think, Rick, on these Valentine's results? Is it just a positive spin, or you think we're not as dire?
I'm surprised with the apparel results. It seems like that would be a good gift, but you're telling me they're down?
Slightly. Yeah. 0.8%. So everything was down, right? Like everything's down overall, almost 6%. So I think, it was less down than some of the other categories.
Is there a correlation between Valentine's Day and the rest of 2024 is, the question I have, because we're trying to predict really what's going to happen the rest of the year. And so I wonder if you had any more stats about that.
Yeah. It's interesting. I'd really tried hard to dig deep, and is there any foresight? I think, to your point, this was kind of like the next big holiday after the holiday season, unless you're going to count the Super Bowl, which people blew like $80 million or something on Super Bowl parties. So maybe they blew it out then and they don't have any money for their Valentine's party. Like St. Patrick's Day, not really a big thing. We're not really gifting around St. Patrick's Day. So the next big one we're going to look at is Mother's Day and Father's Day. And what's the gifting season hold? How does retail stack up? So I think that ultimately, it's hard to say if the Valentine's tease is really an insight of what's going to happen. But the fact that it's down, not up, I think is not the best sign for retail.
Yeah, exactly. I'm actually kind of like totally surprised by these results. which is a little bit worrisome. But we do have some, you mentioned the Super Bowl, which everyone gathered together to watch, not Patrick Mahomes, but all the Temu ads, not Temu.
Yeah, Temu ads. Well, you have to shop like a billionaire.
Right. Right. Buying your $2 junk.
I can get like $10 fake Uggs. I mean, I'm going to really again, shop like a billionaire. So yes, I think that we have to kind of keep an eye on this one. The other update we have is Ipsos did a study on consumer sentiment. It's not that different than things that we've seen in the past. Generally it's better than from a year-over-year perspective. But labor and how people feel about the job market and job security had the biggest decline. So that was down over half a point. Down over 5%. That's not surprising given the layoffs and kind of what's happening in the environment. That's the latest news, though. That's what I got for you.
No, that's great. I mean, look, there are a lot of layoffs in tech, but it seems like the rest of the economy, the market has still been pretty good. Inflation is more persistent than I think the Fed thought it was going to be originally. And I think there are a lot of upset investors that interest rates are probably going to remain higher for longer.
100%. Treasury on the rise. It's where it's at. We got 2 turntables and a microphone, all in the Treasury. The latest outlook is potentially for the first rate cut. We'll keep you guys posted. We'll have the February jobs report out in the next couple of weeks. That'll be interesting to watch. Labor market, to your point, still strong, still holding it for unemployment below 4%. Been like that for 24 months. We'll see.
In the big commerce earnings call, they were talking about 2024 outlook. This is a year of profitable growth. And analysts were asking them, well, what is it going to take for profitable growth? It's like, well, first, profitable growth, we need the consumer to feel good. Then we need businesses to feel good. There's a lot of ifs in that strategy. It didn't project a lot of confidence.
If you can control the consumer sentiment, we would all be extremely rich. And your consumer sentiment's also going to follow where the politics are. Like half the country is going to be feeling shitty and the other half is going to feel not so shitty.
Exactly. I think that describes our November that it's upcoming.
Exactly. We have really rounded out our coverage today. We've spanned multiple countries. And any final words, Rick, you want to leave with?
Yeah, I would get ready for the summer because I think all the retail analysts are predicting that 2024 will be better. And so that means we're going to have a roaring summer. People are going to get out. They're going to party. They're going to be spending money like it's no tomorrow. So that's what I'm looking forward to.
All right. I guess you and the Swifties, right? Hitting the concert scene. Copyright friendly, though. Thanks, everybody. Have a good weekend.